In this video, we're going to show you just how the perfect momentum strategy works and what you can do with the perfect momentum strategy once you apply it to your chart. So with this perfect momentum strategy, you can detect potential extreme tops and bottoms, and you can do that using momentum in just about any way possible. And using momentum is so important because it's really the true underlying force that drives price. And there are also numerous momentum patterns that happen over and over again in the markets. And with this perfect momentum strategy, you can define and detect any of them. Momentum is also important, actually extremely important, in showing the highest probability of what extremes price wants to go to. And being able to detect the momentum is what separates traders that lose money from the handful of elite traders. So with this perfect momentum strategy, you can also define and detect extreme price momentum moves in real time as they happen. Now, with that being said, you can start trading this strategy literally within 60 seconds of applying it to your chart and with all the default settings. And in this particular video, I'm not going to go into how to use every single detail. We do have other tutorial videos that do go into each setting in complete detail. But what I wanted to do was to give you a quick overview of the power that this strategy has and complete mastery it does over finding true momentum. And that way it can get you to potentially what are the very best trades. So let me start showing you how this strategy works and what it does. So after you define your testing dates, your back testing dates, or the dates you want to look for, you could even set date in the future. There are so many ways to detect momentum. We have 6 different stochastics built in, and you could use those all on different levels. So let me just demonstrate to you right now. So imagine we had a stochastics on the chart. Let's say, let me throw an extra one as an indicator. Okay, I actually had put some up here earlier, so let me show this to you right now. So here's what's actually happening. You have stochastics 1, 2, 3, 4, 5, and 6. You have 6 different stochastics on here that can all work at the same time, and they can all detect momentum on different time frames. And you can use them all with each other at the same time to really detect periods that are extreme tops and bottoms. So for example, we have this first stochastic set on a 2 setting. It's a 2 length. Okay, there we go. And what's going on here is we're looking to go long any time the stochastic goes underneath the 1 oversold level. So you can see here on the chart, every time it goes under 1, you can see that here on this stochastic, we had a long entry. Over here, we had another long entry. So that's how this is working at its very most basic function. Now, if you want to get a lot more advanced, let me just show you the complexity and depth this can go into. Let's say you want to add a second stochastic to this, but you want this stochastic to maybe look at a 24-hour period. So let's set this stochastic to 24 just to show you what's going on here. So now you have this stochastic looking for any time it goes underneath 1. And then you have a second stochastic, which is also looking for it anytime it goes under 1. And it's looking for those 2 conditions to happen together at the same time. So you can see here, now that we've stacked that behavior onto each other, we have this condition right here where it went underneath 1 on the first stochastic and underneath 1 on the second stochastic. You can see that right here. And you can actually continue that for 3, 4, 5, 6 stochastics. So what that would look like behind the scenes, you would not have this on your chart, but this is what's happening behind the scenes. You would have each stochastic measuring higher and higher and longer periods to get true bottoms and true tops. And then what you can do is stack those all together. And you can have them each look for different extreme oversold levels or overbought levels on the chart. You can also change the time frames that they're looking at, which is very key. You can have them just take longs if you want. So anytime stochastics and momentum moves beneath this level here, beneath 1, we can just enter long. If we want to exit that stochastic when it reaches 99, we can have that setting over here. So a lot of different ways you can mix and match the stochastics with each other. And even the control you have over the stochastics, you can change their smoothing length. You can even choose what kind of simple moving average, exponential moving average, or whole moving average they use as their basis. So that's just the stochastics. Moving on, we actually have even more. We have 3 ultimate oscillators built into here. Ultimate oscillators are something designed by, I believe it was Larry Williams. Ultimate oscillator. Let's look at that. Yeah, it's Larry Williams. And this is also great at detecting tops and bottoms. You have 3 different ones that you could use to measure different time frames, each with their different multi-time frame variability on them. You can use these together with stochastics at the same time, or you could use these by themselves. Moving on, you also have PPO, which is price percentage oscillators. The way these work is they look for a divergence in moving average as the moving averages cross. So I won't go into detail on how this specific works, how this indicator works specifically in this video, but we do have other videos for that. So again, you can define your settings for that. You have one of those. And again, you can combine that. You could use it by itself, or you can combine it with any ultimate oscillator or any stochastics. Then you have RSIs. You can do the same thing. You have 2 RSIs. Each has their own time frames. You could use those to long or short with. Then you have a Connor's RSI, 2 of those. So you have Connor's RSI, you have RSI, you have PPO, you have Ultimate Oscillator, and you have 6 different stochastics that you can use individually, or you could use them all on different time frames to get super specific entries and exits based on pure momentum. Okay, moving on from that, those are just your momentum-based entries and exits. You also have the market regimes built into here. And again, a different video will go into these, but market regimes allow you to quantify via numbers what bear markets are, bull markets are, and sideways ranging markets. And that is so important for a trader to quantify the market so you know what environment you're trading in and what type of trades you will take, because each of those type of markets does trade differently. So you can really get specific. For example, if you only want to take longs in a very bullish environment, you can set that up here with the market regimes, and you actually have 3 of them that can be on different time frames that allow you to get really specific. So you could have a short time frame, a middle time frame, and a long-term time frame market regime that are all measuring the market, and then all specifying entries for your momentum. So you can get laser focused in on those. You also have them for your short. So you have one set of market regimes to quantify your longs, and then another set of 3 for your shorts. Now, You also have the ability to delay your entries on longer shorts or your exits on longer shorts, which is very important in momentum strategies. Sometimes they can stay oversold or overbought for a while. So this allows you to delay that and get even better entries and exits. You can specify if you want to take long trades only, short trades only, or both. Now we have this thing called move stop. And let me show you what that does. So let me sit back here, for example, real quick. We're going to use a stochastic strategy that will buy underneath 1 and sell when it reaches 99. Now what happens a lot of times with stochastics is this thing called roofing. And that's when an asset's very bullish, it can actually stay. Here's actually a good example. On a longer stochastic, you can see it. It stays oversold for a long time. I'm sorry, actually rather overbought for a long time. They say they can happen with oversold in a bearish environment, but here it's just staying overbought, overbought, overbought. So this is proprietary to Zen trading strategies, but we have developed a move exit strategy. And let me show you the power of this. So when you get an exit that comes up on the chart, you can actually move your stop loss underneath that and continue in the trade. So you can see here that the profit nearly doubled. Now what's actually happening on the chart, so you can see it, let me actually show you what the stop is doing. So let me go to our stop loss section real quick and put that on. Let me just put something really, really wide so you can see what's happening here. Okay. I'm also going to take off our take profit so we can just enter and exit off stochastics. Okay. So now you'll see exactly what's happening. And let me take the move stop off for a second so you can see what happens without it. We have so many options in this one. Okay, so we're going to take these two options off. Now without the move stop, our stochastics gets oversold and it stays there. You can see a lot of times it stays in this area. And same thing with these bottom indicators. Now with the move stop, what's going to happen when let's say we have an entry here and we're supposed to exit here, it's actually going to place a new stop loss underneath that and then trail it. So to see that visually, what's actually happening, let me show that to you. So we're going to cancel entries if position is open and then use move stop. So the exit we had here, we moved our stop loss underneath and now we're trailing it. And we're trailing it and we're trailing it and we're trailing it. Now our exit was actually over here. We got a much, much better exit on it. So this solves roofing problems with momentum strategies and stochastics. Very, very powerful. I have a whole tutorial just on this. I'm not showing you everything I can do nor explaining it in full detail, but just trying to give you a quick overview of it. With your move stop, you can move your stop loss. You can use a average true range stop loss. You can use a trailing stop, an average true range. There's many different ways to move your stop loss as soon as it would exit. So that's what that does. You also have a position sizing algorithm built in here. So if you want to define how much the maximum percent of your equity you're willing to lose, and you want to use position sizing where you can actually have the correct position sizing every time based on market volatility, you can have that in here also. And it'll change your contract size that you use for that. And then what you could even do is on different market regimes, say it's more bullish, you can actually use a higher position size on those type of markets. So let me show that to you. Let me take here's a bullish environment. Okay, so now we have that turned on. And I'm going to just use 3 times the amount. 3 times the amount that we normally use during that period. And you can see there down there how that increased the profit because we're actually using higher position sizes in more profitable periods. Okay, moving on, you have different ways of defining that. So depending on what kind of market regimes there is, you can use less or more position sizing. Very, very powerful to use with stop loss systems that use average true range. Then you have your standard stop loss options. You can do stop loss from your entry or previous high and low. You can define that by any fixed percent to the 100%. You can use ticks or pips. You have an average true range stop loss, which has a multi-time frame. You can define any length or multiple to the 100%. You can move your stop loss to break even when you get in profit, or you can place your stop loss at break even as soon as you get into the trade. You can use a trailing stop with a fixed percent and define that by ticks or pips. You can use an average true range trailing stop, Connor's RSI stop loss. You can use all of these with each other by themselves. And then you take profits. You can take profits via Bollinger Band exits, if price exits Bollinger Band or exits a Keltner channel. Let me show you how that works. So right now, if we have a Bollinger Band with a 5 multiplier, we're going to show it pop up on the screen here in a second. The strategy just needs a second to calculate. And make sure we have that all turned on. Yes, we do. Perfect. So go back to our take profit strategy settings. Just waiting for it to calculate. So here, this was a Bollinger Band exit. This is another Bollinger Band exit. If I change it to Keltner channel, these are Keltner channel exits, and you can change your indicator length or multiplier. Now, if you want to use a fixed percentage from entry to the 100%, you can do that for your take profit. I'll show you that as an example. You can use average true range take profit. You can use Connor's RSI as a take profit. And all of these you can combine with each other or use by themselves. And whichever condition happens first is where you'll be exited. Now moving forward, on top of that, we also have these entry filters for your longs and for your shorts. So we have an entry filter and then an entry filter for the short. So one for long, one for short. And for those, you can filter them out by so many different ways. You can use RSI if your trade is above or below a certain RSI. So we'll see here, for example, if I put this has to be above a 90 RSI on a 4 time frame, this will probably get filtered out. Oh, I need to click on use entry filter long. And we see it got filtered out. Actually, all the trades, so this may be too sensitive, but you can filter out your trades through RSI, through Stochastics, or your trade entries being above or below a certain exponential moving average. It has its own time frame you can use to look for. To get even more complex and more advanced, you also have volume as an entry filter. So if you want to look for trades that are above or below a certain volume, percentage above the volume moving average, you can do that here. So here, this is saying that if the trade has to at least be 20% above the 50 volume moving average, then they can enter. You can also use price action. So if you want to look for trades that the bars close or the candles close within the top 10% of the bar, you can look for that condition as an entry filter. So we probably didn't have any of the bars close in that specific. Same thing with the bottom X of the bar. You can use bar closes or bar highs go higher. So if we want to look for a bar, an entry that goes 1% higher than the last 2 bars, we can look for that condition here. We can do the same thing for bar lows go lower, where the bar closes goes a certain amount of percentage higher than the last bar, and same thing with bar closes go lower. And then you have here an exact copy of the first entry filter, so you could use this for a higher time frame. Here you have exit filters for your longs and shorts. So this one's for your long, but if you're in a trade and say you don't want to exit if the RSI is above 95, for example, you don't want to exit at that. You want to stay in the trade and try to ride it longer. You can see how that can help with your profits sometimes and keep you in the trade. And you can exit it by RSI, stochastics, or above or below an EMA. And here you have the exact same filters for your shorts that you could use for longer or shorter time frames. So there's so much you can do with the strategy and so much filtering you can do to get exact conditions of momentum that you're looking for. You also have a properties tab to define your capital, so you can put your capital here that you're using as a default. You can use compounding with percentage of equity, or you could use a fixed amount if you wanted to over here. You can set your commission, your slippage. You have full control over what your entries and exits. So this is, anytime it's a green, it's a potential entry. The red is a potential exit. You can see that over here. And these control your take profits and stop losses. You can show the trades on the chart, your signals, your quantity, and it's all adjustable to you. So I know this was a lot to go over, and I didn't go over into everything in detail, and it's impossible to in one video because there's just so much of this strategy, but just wanted to give you a small idea, at least, of what the strategy is capable of doing and how you can measure momentum literally in any way possible and get really, really filtered with your trades on your bottoms and your tops, looking for specific patterns. And then control it with stop loss and risk management, and also take profit. So hopefully that helped. That's it for this demo. All you got to do is subscribe to the Perfect Momentum strategy. And after you subscribe, you'll get invite-only access on Tradingview. And then you can apply this to your chart. And without tweaking it, you can get similar results that you're seeing down here that I showed you. And you can make it even better if you want. What I'm showing you, I didn't even really filter. This is just kind of some default settings that work well with most charts, but you can get really dialed in so you get maximum profits with minimum loss. And these are great numbers, almost unheard of numbers, but you can get them even better. So that is it. Happy trading and enjoy. Thank you.